Google made a new 52-week high today, August 31st. So will Google make higher highs or will it pull back now? What do you think? Because the unusual options activity today are giving us mixed results. So let's dive into it. Google, G-O-O-G, we can see 6,000 unusual options for the October 20s, the 135 strike calls and 135 strike puts. Buying the puts, selling the calls. When we take a look at the options chain, we see the 135s here. We know that because on the put side here, the volume of those 6,000 is much greater than the open interest, that these are opening trades, right? So they bought the 135s and sold the 135 strike calls. And when we analyze the trade, you can see that this is a synthetic short position. You can see the Greeks, a negative 100 delta, basically like shorting 100 shares of stock, because each stock is 1 delta. And so if you short it, it's a negative 1. And so you can see here as Google trading at 137 goes down in price on the x-axis. This profit loss diagram shows a gain as it drops in price, because this is a short bearish position. However, when we take a look at Google with the other ticker, with the L, it's the same company, Alphabet, Google, and we take a look at the unusual options activity for this ticker, we can see 10,000, right? October 20s, also the 135 calls, 135 strike puts. And we can see here that because the 366, the price here is a lot closer to the bid price here, that this is more likely to be a sell on the put side. And the calls here are closer to the ask. Okay, so that's more likely to be a buy on the call side. And so when you analyze this trade and take a look at that 135 for the October 20s, we also see here the volume of 10,000 on the put side greater than the open interest here. And so if they had sold the 135s and bought the 135 calls, and we analyze this trade, you can now see that this is a synthetic long position, where this is a positive 100 delta, right? So this is bullish, right? As the price now goes up on the x-axis for Google, this will gain in profit, right? This is above the zero line. Anything above is profit, anything below is a loss. So we have these mixed results from unusual options activity with these two different tickers. And this amount is not something to neglect, because they did 10,000 on this one. They sold the 135 strike puts, which is essentially saying they're willing to buy Google at 135 if it drops below that, 100 shares of them. So the buying power required to sell one of these puts naked here is 13,500 times 10,000 contracts that they did. That's $135 million. Okay, so because both tickers are giving different bullish and bearish, what is really going to happen to Google? This is part of the reason why sometimes these stocks that are traded very, very often, the Magnificent Seven or any kind of stock that have very high volume here. Google's had 29 million volume. That's just for this ticker, but the other ticker had also 27 million. And so by having so much volume, you get mixed results that could be opposite towards each other when you try to predict the stock price movements using unusual options. So that is why when we choose our stocks, the ones that we found that are more accurate are the ones that are not being traded as often, not these stocks that are that everybody else is trading, like Tesla or Nvidia or Apple or Microsoft. So if you are interested in these other stocks where we can predict the stock price with our analysis at a higher accuracy rate and to show you the data, then join our membership where we share exclusive videos to our members whenever they are valued higher than $1 million. All right, so click the join button if you are interested on our channel homepage, and comment below on what you think will happen to Google. Will it pull back from its recent 52-week high, or will it continue to make higher highs? It will be very interesting to see who gets this right. Comment below